peculiar term which all these 3-4 decades that we have been practicing with this profession, I have not come across this term. Changing accounting pattern. This is the term which has been used. If your gross loss is the consequence of changing accounting pattern as opposed to historical accounting pattern, all I can make the head and tail out of it is, if you have made a change in your accounting policy, in your accounting treatment, in your method of accounting, in applying a particular standard or not applying a particular standard, if you have engineered your loss, quote unquote, to arrive at that gross loss, then the commissioner is empowered to disregard that particular changing accounting pattern and impose that minimum tax, thereby effectively meaning that you have not made a gross loss. This is a very major change which was not there all those 16, 17 years. This provision has been on the statute book. I strongly would recommend through the good offices of this forum that this changing accounting pattern, which can lend itself to God knows how many types of interpretation, be substituted by more commonly recognized terms, which every one of us, and at least in financial and accounting parlance is understood to be. There is no such thing as accounting pattern. Yes, the tax law has been using the term method of accounting for years together, both in the 1922 Act repeal, in the 1979 Ordinance repeal, and also in the current law. But there is no such thing as accounting pattern. One additional thing which again to my mind is a deviation from the concept of minimum tax, at least compared to its original conception. The idea was that if your current tax liability on all counts arising out of your profit from turnover, of your other income, so on and so forth, if your current tax liability is less than 0.5% of the turnover, then in that case minimum tax became applicable. This year they made a change that in determining this minimum tax, you will disregard that tax which you have paid on any service fees received for services rendered or anything else on which you have been subjected to final tax. Now this is a deviation from the very concept of minimum tax. All you need to do, determine 0.5% on turnover, that is the benchmarking, and compare to that all the taxes which you have paid, and then compare the two and see whether you come up to the benchmark or is there a shortfall. That's what minimum tax is all about. It's not that what you have paid is paid and we'll see 0.5% on turnover as an additional tax. That has never been the concept of minimum tax, at least being one of the proponents of this concept. I can say this has never been the idea that you will pay additionally. But anyway, you must know that this is a change from all those 16, 17 years which has been brought about here. You might be trying to know how it has affected you as far as finance bill is concerned, and I'm conscious of the agony that has been caused by two particular provisions which have been brought in, and I'm making a little deviation from corporate to personal tax here. Yes, undoubtedly, you have seen in Masood's slides that you have lakhs of internally displaced persons for whom you need funds. We owe, as nationals of this country, our duty to rise to the occasion and come up to their help. But there's a way of doing it. This time in the finance bill, they have put in a provision that in the year 2009, tax year, meaning June 2009 end, if any corporate executive, now by the way, to me all of you are sitting here are corporate executives, I'm sure. But corporate executive has not been defined. And there is no such term in the whole of the tax law defining a corporate executive. Yes, we have in the Companies Ordinance a definition called executives for the purposes of disclosing executive remuneration. But there is no such thing as corporate executive defined anywhere. Maybe CBI may come up with its definition, the rules, or in a circular or whatever. At this stage, we need to keep in mind that the corporate executive, having earned or received any bonus in this year, which has already passed, You need to be extra philanthropic in your attitude and behavior, and you will share 30% of that as an indisplaced person's tax. And there is a sort of a commitment, quote unquote, in the finance bill. It is a one-time tax. My worst worries are, having seen finance bill over the years, that many a times what is said to be for 1 year continues to be there for all times to come. You have seen this. We gave exemption to capital gains on shares. Koi mai ka lal hila nahi sakta wahan usse. It's there for all times to come. Similarly, there are many things in the law which have come in once. It will require Herculean effort on the part of all of us to make them convinced that for God's sake you said it was for 1 year and please remove that. I vividly remember the budget following the 1965 war. Probably the finance minister was Mr. Qizilbash, and he made a fervent appeal in the budget speech that we are in a state of war and we need funds. So those companies and those SSCs who are enjoying tax holiday, they will give tax this year, and the term used was Qarz-e Hasana. So I keep saying the definition of Qarz-e Hasana is you give of its zindagi bhar haste rahiye. And it so happened that like that those tax holiday companies who were asked to give tax only in 1 year, they were made to suffer repeatedly year after year. And the same thing, that one-time thing never happened. So my worst fears are not that in 1 year it is legitimate or it is plausible or it is justifiable. Perhaps it is not. Why should only corporate executives be made to pay this? Why not the honorable members of the parliament? Why not starting from the top of the country to the bottom? Why should they not be? Why should they go scot-free? Are they not as much Pakistanis or they don't want to be? And they only want corporate executives to be Pakistanis? This is something which is not understandable. So if they had said that for 1 year, we are in a state of war, and let us take tax on agriculture as well, just for 1 year. We promise we will not take next year. Would they have the audacity to do that? They have not done that. For capital gains on stocks, please give it for 1 year. We are in a state of war. We have got huge funds. We need huge funds to foot the bill. And the war is still on, and it is an open-ended war. God knows when it will end and how it will end, and what kind of catastrophic consequences it will bring in the process. But none of those things have happened. You are so fortunate, you are elites, you are privileged, that you are the only ones who have been bestowed this kar-e-khair. And so you'll be paying. But this morning, Business Recorder has given a glimmer of hope. And it says that it is not for 2009, it is for 2010. The rate continues to be 30%, and the privileged few continue to be you gentlemen, corporate executives. Ladies and gentlemen, I'm sorry. Otherwise, Huma, you will tell me, where am I? So this kind of thing is something which, when I laid down the principles for testing these provisions, they don't fit well. They don't give us a good feeling. They don't show transparency. They don't show the sincerity of purpose. The only purpose that you can glean and discern out of it is, you want money, so by hook or crook, you get hold of a mass of people, give them a name, corporate executive, please give 30%, and so on and so forth. This is not on. Yes, I'm sure we as corporate executives, we as professionals, would like to be in the forefront. We've always been. And there is no reason why we will shirk our responsibility. But being singled out is something which is not on. Business Recorder has reported, I have not seen the amendment, so I'll only lay reliance on it as much as you can on the print and the electronic media. Sometimes you read a ticker on one channel or the other that something has happened or something is going to happen, and the whole 4 hours thereafter you don't see anything. So you just try to ask yourself, were your eyes looking at the right thing? So I did read this in the Business Recorder. I've got the cuttings with me here. You must also have read it. That this is going to be for 2010. It was a typographical error when they said 2009. This is what they said. and so much of due diligence and care in churning out a finance bill, which is the nation's fiscal document. There is a typo which has, I think, enhanced the heartbeat of many sitting in this hall. And this kind of typo, if they keep on happening, there is one more typo, I'll come to that. And there could be many more, which the time will not permit me to go into. So let's hope that it is for 2010, but let us also hope that they bring down the rate to a reasonable level, and they bring also in this net others who have been very conveniently been left out. Yeah, Rasana? Ek glass pani dena. So I thought I'll just share this with you. And secondly, every individual and AOP is supposed to be paying a 5% additional tax on the tax liability, again dubbed as IDBT? Internally Displaced Persons Tax. How conveniently this term has come in handy for the Federal Board of Revenue. So 5% will be paying of our tax liability. 5% of tax liability will be paying as additional tax. This also presumably is for 2009 or 2000. Again a typo. There is no typo there? Okay, there is no typo there. So you will be paying for the year 2009. But that act of philanthropy on bonus, that is for the next year, as reported in the press, will come to, I think, in a couple of days. I got few emails, I got few sort of, I would call it advices and instructions, कि Ibrahim साहब please कुछ कीजिए, ये तो बड़ी ज़्यादती है. I said, if I wish I had my way, I would do, but anyway, this we have read this morning, hopefully it will be done. Let me move on to another important amendment. Of course, that doesn't concern the whole hall here, but that does concern those of you, ladies and gentlemen, who are from banks. As all of you know, that claiming a bad debt in a bank, for that matter, claiming a bad debt even in a commercial organization, we know from years, it has always been a very, very difficult task to convince the department that it is really a bad debt, please allow us. But for banks, as you know, they are in the business of taking risk. Sometimes taking risk consciously and diligently, and perhaps sometimes, perhaps in a reckless manner. But the fact remains, a bad debt is a bad debt. So in 2007 Finance Act, a schedule called 7th Schedule, specifically dealing with the tax regime of banks, was introduced. It was a wise decision. It was a well thought of schedule. It catered to most of the contentious issues, apart from few backlog of issues that were not addressed, and they are still not addressed today, despite so much of fervent appeals and persuasion and whatnot. But that particular schedule came in, and that was a very, very rational step. And although it was to be applicable from the tax year 2009, it came in a year before, of course, in 2007. And in that, the scheme for claiming bad debts on non-performing loans and items related therewith was provided. I'm not going into the details for want of time. This became a bone of contention between the department and the banks and, of course, their counsel and professionals. And in 2008, they did away with that even before it was tested. Now the situation is, when there was hue and cry by the banking industry, both individually and at the association level, they thought they are doing a big favor now and conceding to the request and all the sort of appeals and persuasion that was going on. They have brought in this particular provision with a very huge mistake, if I call it a mistake, that now you will be allowed, of course in the event of bad debt, only 1% of your classified advance as a tax deductible. Now, somebody tell me, if out of your total portfolio of advances, your non-performing is 100 and you are allowed only 1%, i.e. 1, वो बकौल शख्स के उर्दू में कहते हैं कि 99 का क्या अचार बनाना? What I'm going to do with 99? Surprisingly enough, the related finance bill document called that notes or explanatory memorandum, that says it is 1% of the total advances. I am only hoping and praying, not hoping against hope, that this is also a typo. Just as the typo I have referred to in the earlier case. Because if this is a typo, it is a good typo. And it must be corrected. Because this is not on. You can't have, following the prudential regulations, and you have got to classify advances, and I say, I will allow you only 1%. Oh, my dead body, nothing more. Now, this is something which defies all logic, which fails on all the fundamental principles I have just recounted in the beginning. We are not giving a charity. We are trying to lend some semblance to this whole process of bad debts. And if we can't take care of that, somebody would say, forget about this 1% as well. So, this is in need of revisiting, a close, dispassionate consideration. After all, banking industry is not ordinary industry. If a banking industry is affected in an adverse way, as we have seen in US and in the rest of the world, in Europe, if the banking industry goes and gets into trouble, it has got reverberating effects throughout the spectrum of the economy. And God forbid if that kind of thing happens, then we are already suffering so much on account of a variety and range of problems. We don't want to add yet another problem to that whole list. And I'm sure better conscience and sanity will prevail, and they will revisit this. Particularly when the related budget document does say 1% of total advances. That makes sense. As regards the transitional provisions for banks, again the industry has been clamoring for that for long, for the last about 2 years or so. It has been falling on deaf ears. I don't know what is so difficult to understand in that. And why is the reluctance to consider that dispassionately and in the interest of the industry, which has got far-reaching consequences throughout the spectrum of the economy. The transitional provisions have again been missed out. It was expected, and for that matter, my colleagues in the profession, they expected very vigorously that something is going to happen in the 7th schedule this time, but all in vain. We are sorry, we are disappointed, it has not happened. Coming to another very important change which has been sought to be made through the finance bill is with regard to the treatment of exports. Every person, when he does take a step, if he is a sane person, if he is a careful person, he will take into account the surrounding circumstances. Mauka mahal ko dekhenge, is this the right time? Are we doing the right thing? Would it not further impair the already deteriorating situation? How would it be received on the other end? We can't remain oblivious to these considerations in as important and sensitive a matter as a fiscal measure. To our great surprise, again this is part of one of those reform processes started in the early 90s, that exporters were given a sort of a facilitation. I am not supporting or defending this provision on any conceptual premises. I am supporting it because the ground reality made it inevitable that you have something like that. Otherwise, that 10,000 sample of companies which I alluded to in the beginning, that included a large number of such export companies, such exporters, who are paying nothing, who are just going scot-free. Whether they are making money or not, this is your guess and my guess. So in order to bring in something from them, in again the early 90s, probably it was 1992 Finance Act, that every exporter will be subjected to a withholding tax at source, and the authorized dealer will deduct I think initially it was perhaps 0.5%, and then it was raised to 1% later years of the export proceeds as the full and final tax, so that they are insulated from the rigors of our tax system, which the lesser said, the better. All of you are aware of it. And it worked well. It worked well. There was a collection on this count. An exporter who is not conscientious or responsible enough and keeps on declaring loss after loss, be that may, he was supposed to at least have contributed 1% of the export proceeds, which can't go undetected, which can't go uncollected. This year, whosoever has advised them, best of luck to them. This particular final tax has been characterized in the finance bill as minimum tax, that they shall be required to submit and file a tax return. They will be assessed in the normal manner, and they will be subjected to this as a minimum tax anyway, regardless of your actual tax liability. If the actual happens to be more, obviously you will be required to pay more. Fine with that, no problem. But we cannot lose sight of the fact that whenever you bring in any presumptive or scheduler tax, conceptually speaking, you have two major considerations in mind. And certainly these two were there when this was brought on the statute book as far back as 1992. And it was, A, you have a reasonable collection from that particular avenue, and B, since regardless of results, loss or otherwise, they will be required to pay that, so there has to be a sweetener. There has to be a quid pro quo for that. And that quid pro quo was, they will not be subjected to the usual assessment. That will be full and final discharge of their tax liability. Now, somebody has put into their mind, or it has dawned from somewhere, that this final tax be not final, be called minimum tax. And in the last 2 days or so, when the chambers and federations and whatnot, who were quick enough first to perhaps appreciate this budget as a very good budget, which is very common in our country, no matter the finance minister or the lady finance minister has presented the budget, kaisa budget hai? Haan ji, bahut acha hai, development budget hai, issa badi achhi, ye baat hogi, wo baat hogi. They were very, very quick at appreciating that without noticing what is in it. As I keep saying, I said the other day on the other forum as well, you cannot comment on the finance bill, on the basis of the finance minister's budget speech, unless you catch hold of the law itself, namely the finance bill. Because whatever you hear he or she being uttering in the budget speech is something which is flowery, is something which is shairi. Half of that is perhaps not intended to be achieved, and half of them they are not capable of achieving. So that doesn't mean anything to us. What is meaningful is, what do you see in the form of a finance bill? And let me hasten to add, even that too is half the story told. Because many a times it would say, in accordance with the rules to be prescribed. And the rules will prescribe something much more than what the law has enshrined, what the law has permitted them to do. Although the fundamental cardinal principle being, the subordinate legislation cannot transgress the limits of main law. But sometimes in this country, हम सब कुछ कर सकते हैं, बड़े बहादुर कौम है, we do that. So half the story is that, the remaining sum is in the form of rules, and finally the Federal Board of Revenue has to play its role. Something else will have to be said in the open circular. Hopefully consistent with the law and the rules are, but sometimes going beyond that as well. So there is no use just rushing into saying, ye bahut acha hai, bahut bura hai, unless you have a full comprehension of all the dimensions of a particular potential law and how it is going to affect. Same thing has happened with regard to this export tax. This morning again in Business Recorder it is reported that it is a typo. This minimum tax is now going to be maximum tax. Now just for a moment, आप अगर गुनूदगी में तारी ना हो गए हो तो just dwell on it, just try to reflect on it, ponder on it, and just try to recall what 113, what this provision is. And can it be called maximum tax? Because you are required to file a return as well. So if a return has to be filed, what for? for filing in the shelf, or for being sold to the Raddi, or for something else? Why is the return going to be filed? If 1% on export at source is to be construed, if I were to believe this press report, that is not going to be minimum, which the finance bill says, but going to be maximum tax, then why this whole drama and why this whole rigmarole of filing a return and assessment? Because I will tell the tax officer, do it whatever you want, this is going to be maximum tax. So what for am I going to file the return? And what for is going to be the process of tax assessment? So I have really not been able, I have been struggling, and my colleagues sitting here, we have been struggling to understand the true import of this substitution of minimum by maximum as to how it will work in practice. Because there is no logic behind it. It is contrary to what this provision fundamentally is. The best thing was, it had to be a final tax as a quid pro quo for not going through the process of return and assessment and whatnot. But so we hear it is going to be the maximum tax. But you will file a return and you will go through the vagaries of the system and so on and so forth. With regard to importers, those of you who are importers, hold your heart. This country has seen lots of experiments, be it constitutional law, be it any major facet of our life, and certainly our tax law has never been an exception to that. Again, in that particular period, and I'm referring to that period because that particular stage, that particular phase was such when the old tax system and tax law was considered by all and sundry across the board in dire need of fundamental change. Why? Because it was a source of great harassment to all and sundry, regardless. So the major term of reference of that particular commission was simplify it, make it responsive to the needs of the taxpayer, make it responsive to the needs of resource mobilization, and no matter it may not fit in the bill as far as the conceptual justification is concerned in its true sense. Because I know it was criticized right, left and center. कि जी ये क्या टैक्स हुआ इंपोर्ट पे लगा दिया, ये क्या टैक्स हुआ एक्सपोर्ट पे लगा दिया, ये क्या टैक्स हुआ मिनिमम लगा दिया. Perfectly right. No quarrel with that. I'm not here to contend against that. But the provision was brought in because the withholding tax was on the one hand, and Chambers and all others were complaining that in the normal course of assessment, if there is a refund, then the refund has a price tag. And for that matter, a very hefty price tag. And in order to do away with withholding on the one hand, and then going through the whole process of refund and creating a plethora of malpractices in the process and polluting the entire system, etc., etc., it was thought wise that certain categories of taxpayers whose books either are not kept, or whose books are kept but are not reliable, or whose books are reliable but they are not to be considered by the tax department as reliable, they be given some sort of simple and straightforward treatment. So this particular provision was born that at import stage, you are subjected to a withholding tax, which if I am not mistaken, it started off at a small rate of 1% or 2%, certainly not more. But as I keep saying, कि जब चटखारा लग जाता किसी चीज़ का, बड़े मुश्किल से जाता. When the 2% was levied, obviously there was huge collection. And the High Court ruled, in a very famous case which is reported, that once such importer is charged to this particular tax on a presumptive basis, he is not liable to